Cool. What's the interest rate today? Down. Yeah,
Down?
yeah, they're going down, yeah, my, oh yeah, hi, there I am. All right, cool. Thanks, Grace.
You're welcome.
All right, so, for those of you, I think I've met most of you, but for those of you that I haven't had a chance to actually say hello to, I'm Justin. I work with Equity Builder Mortgage. My office is right around the corner down the hall from the front door there. The purpose of this is this is almost like a relaunch in a way. So I've been doing these lender Q&As on the first Thursday of each month for a few months now, but kind of tailed off towards the end of last year, which is somewhat expected because of course that's just everybody gets busy with the holidays and everything like that. So today is the first Thursday of obviously February. And so going forward every month on the first Thursday, I'll have between 2 and 3 p.m. an hour set aside to answer any questions that you all have. As well as provide some market updates and insight as far as what's happening right now in the mortgage world. So yeah, that's really the purpose of what this is mostly to help you all out. If I don't know the answer to a question, then obviously I'll find out for you and circle back around. But yeah, so this is way Keller Williams obviously helps you all stay up to speed on everything. So before I jump into anything that I've got on my end, I'll open the floor to you all. Does anyone have any questions or anything specific that they want to ask me that they maybe have come across out in the market here recently? Or anything you're just curious to know about?
I do have a question, but
Sure.
I don't know how to ask it.
Okay, yeah, sure.
So my question is, like, for example, my house, I grow my house
Mhm.
and I grow discount points.
Okay,
So
yep,
right now I'm at 275%.
okay, yep,
So if I go and refinance.
Yep.
Because I want to do at the end of this year,
okay,
the interest rate, I
Yeah.
would not go back to that only if I paid, right?
correct, yeah. I mean, so technically you could keep it at 2.75 if you wanted to. That is a really good rate. So if you are looking to refinance, the most likely, and again, I can't predict what rates are going to do in the future, but barring something like another pandemic happening, I don't expect to see rates down in the twos again. That's what it took to get them into the twos. So yeah, your rate would definitely adjust based off of whatever the market is at that time. And if you wanted to keep it at that 2.75, whoever you work with for that refinance, which could be me or Ryan or whoever,
No,
yeah.
I will be here.
But you just would want to make sure you have that conversation with the lender to say, okay, well, what would the cost be for me to keep the rate at 2.75? So which kind of touches on something I've mentioned before in this class, and that's discount points. So obviously, since you used that as an option when you were getting your place, is everyone else familiar with how discount points work and what goes into how those are calculated? I feel like this is something that I can repeat every month and it would still be like one of those things because it took me a while to understand it all. So, but do you all feel pretty comfortable in terms of how they work? Not that I would expect you to be able to explain to to a customer, but just for your own knowledge.
It's kind of like you're buying down.
Right.
points, Right?
That's
You're buying
correct.
down,
Yeah.
like, Is it a half a point, 1 point? Can you do half?
You can do whatever you want. Well, I say you can do whatever you want. They have tiers. So just like interest rates come in eighths of a point, you can do discount points and eighths of a point. So you can actually buy 1/8 of 1 point. But that doesn't mean that you are necessarily going to see 1/8 of 1 point improvement on your rate by buying down 1/8 of a point. That's where it gets funky because it's like they're not connected. They work on their own independent scale. So, but real quick, did that answer the question for you there? Yeah, okay, cool. Before I can jump into the rabbit hole there. Yeah, so the easiest way to look at it is 1 point is equal to 1% of the loan amount. So for example, if you buy a house and it's listed for $350, but the client has the mortgage payment of the loan itself is going to be $300,000. 1 point would be equal to 1% of the loan amount. So $3,000 would equal 1 point. Typically, the way the market works, if you were to pay that 1 point at closing, you would see your interest rate go down somewhere between 3/8 to maybe a half a point, just depending. These things get adjusted daily. That's why when you hear me say or Ryan say, interest rates adjust daily, That's part of that adjustment every day. So just keep that in mind. So so again, $3,000 would be 1% of a $300,000 loan. And that wouldn't take the rate down from whatever the rate is on that day. If it was 5%, it wouldn't take it down to 4%. It would probably take it down to about 4.625. So again, nothing you guys need to know too detailed amount, but just like to go through and at least explain a little bit of what it is. And remembering that 1% of the loan amount is helpful, because at least that way we are getting into doing some math, and when there's not available, whatever, you could at least help with answering some questions, at least a little bit on that. Nothing too dangerous, right? Question? Yes.
Yeah, what's your opinion on like the 2-1 buy down? Or do you see how?
Yeah.
See what something that's
Yeah,
an
so
option for folks?
the one thing I have conversations with my clients about all the time, I'll tell them, points aren't for everybody. It doesn't mean that it works in every scenario. 2-1 buy down. That's there's been a lot of folks talking that up here recently because of how high interest rates have been. If you know that you're going to be in a house for either A, a very short period of time, or B, if you know that in a couple of years, your financial situation is going to improve, then a 2-1 buy down may be something that works well for you. But again, it doesn't work for every scenario. And so essentially what that is your lender will reduce the interest rate by 2 full percentage points. So if it's at 5%, they'll knock it down to 3% for that first year. And then after the first year, in year 2, it goes up to 4%. And then in year 3, it goes to whatever the market is, or whatever it was when it was originally done. So at 5%. For this example, I guess, well, there's no risk of, or not risk, but you don't have to, you can refinance at any time. I need more words straight today. But yeah, you can refinance at any time. So for example, after the first year, if rates have fallen down below whatever you initially had it, set for that 5%, go ahead and refinance, save yourself money on the interest, and go that route. So there's nothing really locking you in, with the exception of you do pay for that 2-1 buy down at closing. So it's really built for folks that have got additional assets.
How
So
much, how much would it?
it's a percentage. Yeah, it depends on the purchase price, the loan amount. Yeah, I can run scenarios for you and let you see, but it would depend, because basically they have to calculate what the mortgage payment's going to be over the course of those 24 months and the principal and interest part of it. And then that's what they total up, and you have to bring that to the table at closing as part of the 2-1 buy down. So that's why it doesn't necessarily fit for everybody. If you have folks that are like, oh, I'm looking for down payment assistance, or, we're hitting the top end of their budget and their savings, then that's going to not necessarily be a situation that's going to work best for them unless they've got additional assets. Another question?
Yeah, so
Sure.
for the refinance, so there's always closing costs.
Always. Yep. Always going to be closing costs. The nice thing about the refinance, though, is those closing costs can be rolled into the loan. So you don't have to necessarily spend anything out of pocket. Refinance is the one type of loan out there where you don't have to worry about, if you don't want to, paying any additional money at closing. If there's enough equity in the house, which for most folks, if they're refinancing, there is, then they don't have to worry that those closing costs can be rolled into the loan and then go from there.
So it will be taken out of the equity or on the monthly
The
payment?
equity, yeah.
Okay.
So yeah, so the added value that the house has gone up from the time from when you first did the loan to whenever you're refinancing, as long as there's enough equity in there to cover those closing costs, it will. So when I'm running scenarios for folks, let's say that they owe, $220,000 on their house, I'm going to add another $6,000 or $7,000 as an estimate for closing costs, in addition to whatever that refinance loan amount is. And I take that into consideration when making sure it makes sense for them to refinance, because of course, if it's someone that's been in the house for a year, they may not have paid off enough of the loan to cover all those closing costs in there, depending on what the value of the home has been. Now, again, the past couple of years, values in this area have gone up tremendously. So a lot of folks have been able to take advantage of that even after a year. But more traditionally, the old school thinking before 2020 was that you needed to stay in the house about 2 years before it was financially possible to refinance without having to take any money out of pocket. So,
And one more question.
sure. That's why I'm here. Good.
Yeah, yeah, so, when you first get the loan.
Yep.
And then when you retire, is the same step, like 2
Yep.
years in job and the credit and all that?
Yeah. So great question. Yeah. So when you refinance, as well as when you purchase, we're looking at the exact same criteria. The only difference is you don't have to go out and find a house, right? Because you're already in the house. So, but the loan requirements are essentially the same credit score requirements. The employment, the debt to income ratio, all of those factors come into play. I guess the one big difference would be if, you know, you don't necessarily have money sitting in savings, you don't really need to worry about that because again, you've already got the money, the equity in the house, and so you're not gonna be spending any money out of pocket. So, yep. So, anybody, any other questions? Anything else? Sure.
I have, oh, sorry. I have a question. Do you guys have renovation loan products?
Yes, so I can do both conventional and FHA renovation products, or yeah, loans. So 203K is the FHA version of it. There's two different types of that 203K. One is unlimited, meaning the renovations are less than $35,000. The other, more the standard, is for any amount more than $5,000, and that's generally the one that I go for if I'm helping folks with that, because it gives them the most flexibility on that. One of the lenders that I work with actually has a full-on renovation team. So I get the ball rolling, but then I essentially hand it off to them. And they're the ones that's literally their full-time jobs. That's what they do, is help with folks with these renovation loans. One common thing that folks don't realize is the renovation loan is actually closed fairly quickly. It's usually within about 30 days. And then after that, that's when the renovation team steps in to handle the disbursements of any draws to the contractor and to make sure that the progress is moving along in the way that they want it to. So it's not some long drawn out, you know, process, at least on my end. But the renovation itself obviously will take however long it's going to take. So
Gotcha. And are historic properties part of that?
Great. I'd have to double check on that. I would assume so, because I've actually got some charts I can provide you if you want as well. So they give us all that kind of stuff, so we can at least give us a breakdown, let you guys know what's doable with those. So yeah, and yeah, I guess it would just depend on the condition of the property, but I'll double check on that and I can look and let you know.
Perfect. Thank you.
You're welcome, Tim.
And so what's the interest rate on one of those renovations?
Yeah, so interest rates are a little bit higher. It's still an FHA product though, so there's still government backing. So at least on the 203K. So the interest rate will be higher than what you would see on a traditional FHA loan, but it's not terrible comparative to, you know, whereas I think FHA today is sitting in the low fives. You might see around 6.5 on that, just as, you know, today as an example, but I haven't priced out a 2 or 3K in a couple of weeks. So I have to double check and see what that is, but it's not bad.
And when you take a FHA loan, so what are some of the things, like as newer agents?
Yeah.
You know, what's some of the things that FHA is like, is there a checklist that they're gonna require during that process, like the inspection process, or
Yeah.
well, septic, that sort of thing?
Yeah, it again depends. If the property is on, you know, like on a not part of a county or a city sewer plan, and it's using a well, then yeah, they're most likely going to ask, and the appraiser is going to be the one that's going to note that. I got to say, not every appraiser notes that type of thing when it comes to those types of properties. Sometimes they miss it, but yeah, they're going to want to see. I always err on the side of caution and say, yeah, they're going to want to see some sort of a well or a water test, make sure the well is good on that end with FHA. As far as the home inspection goes, of course, as a lender, I would prefer not to know as little about that as possible, but that is one of the nice things as a broker. If you guys do have like a one-off question you want to ask me, you can absolutely come to me with those types of questions. And I can, if I need to ask someone, I can work as an intermediary. So it's not like one of those things where I'm having to go directly to the lender and say, hey, you know, here's my, you know, here's what what we're seeing. And all of a sudden the lender's like, oh, wait, no, we got to get all this extra, you know, inspections done and got to make sure all this work has been completed as well. So
properly, it would be a 3-panel well inspection, right?
I would assume so.
Yeah.
Yeah.
And then on the septic, they would want a septic inspection as well.
Yeah, again, I always err on the side of caution with that kind of thing. And so I would say, yeah, if it's hooked up to that type of water source. So
I had one that was hooked up to city water, and they
Yeah.
wanted the city water report.
really, yeah, I've never had one of those.
That was the underwriters came back.
That was the underwriter that came back with it?
Really?
Yeah, that's interesting. Yeah. So, but again, that also just goes to show you there's no real consistency. Unfortunately, we would love to say everything fits in a cookie cutter and you can go XYZ, but yeah, it's always some interpretation in there. So, yeah.
I was asked this question yesterday. There was an agent in here, and they were like, I told them to go to the lender, but
Yeah.
so they they're closing with their client and the client gets paid a day before closing. They
Okay,
don't have enough money in the bank
okay,
to cover the closing costs, but they will the day before closing.
right.
And the lender had told him to get a gift, and he said, well, if I get a gift, I'm paying it back. And
Mhm.
he's like, they're like, well, that's not a gift.
Right, right,
And
right.
so they're like, well, what do we do? I'm like, I don't know, that's a lender question. It seems to me that,
Yeah,
ask a lender, because
yeah.
would they be okay with, as long as he's got a history of showing that he can show that he's got that money coming in every month, and then he pays it the last day.
If he's
Yeah,
gonna
no,
have
he
it the day, yeah, if they're gonna have it the day before closing, and this does vary by lenders, because some of them will want to just go ahead and kick it out, the closing out a day or two. Because if they're getting paid, we don't know if that pay is gonna show posted into the account. You know, a lot of times with direct deposit, it might say pending. Even though the money's available in the account, you'll still see that little pending on the transaction summary or the bank statement. And so if, in my experience, well, not even in my experience, I know for a fact, if it has that word pending next to it, they're not gonna be able to accept it. So we'd have to wait until the next day until it posts, even though they can see the money's in there. There's, I guess there is some risk involved that that money isn't going to actually be there until it posts. So they have to wait for the posted amount to be in there. So in that case, that, that agent or that borrower's lender is probably waiting until the day of closing anyways. And again, depending on the lender, I know I've had to pull some strings before and get that kind of stuff done to get loans to closing that day. But I know when I worked at Wells Fargo, that would have kicked the loan closing out a few days, because they don't even send out like the early closing disclosure until they know for a fact all these things are in there.
So in that situation, it's best just to go ahead and kick it out, reschedule it.
Yeah, exactly. And I mean, North Carolina, you get 7 days, so it's not like the seller could, I mean, it's obviously not an ideal situation, but seller could turn it in contract or anything.
Well, that's better than going through all the stress the day of and then having it kicked out.
Right, correct, yeah, and even so, to the gift side of things, I tell folks all the time, it's with a gift, we have to say it's a gift. Now, if they want to gift that money back after the loan closes, then, hey, we're good. Exactly. Like, hey, well, yeah, the loan closed, we signed everything. Yeah. So, I mean, and I had that conversation with folks. That is one of the nice things is, again, I can say those things and not spook the lender and not make them think, because they don't even know. Right. So, nice thing about being a third party.
And what that leads us up to, what's the best, or what's the worst 2 days of the week to close, or what's the worst days of the week to close?
Oh, Fridays. Yeah.
Fridays and
Monday. Well, Monday possibly. Mondays are tough because you basically have to have everything done by Friday, especially if it's a 9 a.m. closing on a Monday morning or days after holidays. Those are always the trickiest to do, because again, you really have to have the loan ready even sooner. So if you got, a lender who's like, yeah, I can make this work in 3 weeks, and then it ends up being, either the day after a holiday or, a Monday morning. Monday afternoons are a little bit easier. But yeah, typically Fridays and Mondays are going to be the trickiest. If you could try to schedule the closings for Tuesday through Thursday, that is easier. But again, it also gives you that flexibility that if we needed to, kick it a day because of, not having the money in the account yet, as to use our other example there, then, you've got that little bit of flexibility as well.
yeah, that lines up with attorneys too, right?
Mhm,
That's what the attorneys
absolutely.
tell us too.
Yep, definitely lines up with attorneys. The other thing to keep in mind is also, there's always funds being wired. So this is something that borrowers don't always realize or recognize. You get to the closing table, the borrowers brought their money to the table, whether it be a cashier's check or wire, however they're doing it. No cash. And so, unless there's not a lender involved, of course, but for the sake of this, we'll assume there always is. But the lender has to wire the money over as well, because they are paying off that loan. And that's how the lender then is basically sending the bill to the buyer, every month to pay the mortgage, right? But that wire still takes time on the lender's end. So if it gets to where we're running up against the clock to hit a closing because we're getting everything sorted out on our end, or the buyer's end, or whoever's end, just keep in mind that a lot of times the lenders are not going to send that wire, that 6-figure amount that, for most loans are these days, to the attorney until they know that loan has been cleared to close and until they know that everything is all wrapped up on that end. So I've had situations where, it was a 3 o'clock in the afternoon closing, and all of a sudden, the lender isn't able to send the wire until 3 o'clock, but wires take time to be received. And so that doesn't guarantee that they're going to be able to close or record that day, they'll record the next morning, but it still is one of those things where it can just, it can make folks a little bit more stressed on that end.
For the buyers,
Yeah.
is the wire sent to the attorney or straight to you or through the attorney to you? How does that work?
Yeah, no, the wires always go directly to the attorney. The attorney is the money, basically. So whereas, the realtor is helping the house, I on the lending side, I'm helping with the loan itself, but the money is always the attorney. So they're the ones, that third party that always holds on to that money. And again, they can't record until they receive that money. And so they may have it from the buyer, and then they may just be waiting on that wire from the lender to come through. Again, we try to help avoid that as much as we can, but it's just the nature of the way the business can go sometimes. So definitely something to keep in mind there. So, but yeah, hopefully that helps answer that for you. Yeah, any other questions on that part?
I do have another question.
Yeah.
Back to the refinance.
Oh, yeah, sure, that's fine, go ahead.
Yeah, okay, so let's say, and I like to use me because that's easier to make that the question.
Yeah.
So, let's say, we will refinance to buy another house.
Yeah.
And we get a contract for, to rent that house.
Okay,
Before we jump to the other one.
okay.
That is not gonna count as a debt ratio, or still will count.
It still counts, yeah, so, and let me make sure I understand this correctly, so you're saying you refinance your house, but then you decide to rent it out afterwards?
Rent it out.
Right.
Buy another one.
To
with
buy
the
another
money
one
of
for the money, right, okay, so like a cash out refinance, take
Yeah,
out the money, use that money to buy the next house, and then rent out your current home that you're
Yeah.
refinancing, right? Yeah, no, so I see what you're saying. In that case, the debt to income ratio would count if you're not receiving the full amount of rent to cover the mortgage payment on your original home. So for example, if your mortgage payment's $2,000 on your current home, even after the refinance, but then you get a rental contract signed for $1,500, well, then there's a gap of $500. So that $500 would still be, that it's still counting. It's almost like an extra payment of $500 a month that you would have in addition to the new mortgage for the house, plus any other, liabilities that you have that you make a payments on. So, yeah, good question. That's why it's good if you can, obviously try to get the rent to be equal to what your mortgage payment is or more. Because if it's more, then that even counts as a positive for you, because then that helps reduce your debt to income, because now you're taking in more than what the actual payment is. The other thing,
Repairs too, like all
Right.
the repairs and stuff, put that money in a separate.
exactly, yep, definitely. And then one other thing I'll mention on that, for that to be counted, so in that scenario there, or in really in any scenario where there's a rental property, all we have to see on my end, we don't have to see 2 years of rental history or anything like that. As long as there has been a contract signed and money has exchanged hands, meaning they've given you like a security deposit or first month's rent or something along those lines. As long as those two items have been taken care of, we treat that as, okay, yep, that you're good. So if it's a wash in terms of how much the mortgage payment is versus how much the rent is, then you're good to go as long as money's has been sent to you and there's a contract in place.
so one or two or both of them? It can be one or two, or like at the contract. and
Has to be both. Both, yeah, has to be both.
And can that happen on the same day as closing?
Good question. You know what? Usually they've got it rented out before we get to closing if that happens, but,
As long as we have a lease in place and a deposit on it.
right, because I mean, again, it's gonna take a day or two for that money to hit anyway. So as long as you get to, by the time you get to closing, you've got that
Just
contract signed, the
and
lease
just be
signed.
like their move-in day a week later.
Exactly.
Got it.
Yep, exactly. So I mean, you could cut it close if you wanted to, or if it ends up, that's just kind of the way
And what
way
what
the
type of
timing
down
works.
payment are we looking at on rental properties or investment properties like that?
What type of down payment?
Yeah,
Yeah, so you can do for investment properties specific, and again, it's a little different if you're living in a house as a primary residence. And then you decide to rent it out and buy another primary residence, you can do that. But if you are buying it just straight up as a investment property to rent out, you can put down 20%. You can do 15%, and then you get mortgage insurance and rates and the cost for that, especially with the way the market's been here the past year and a half. It's not, they just put it, the government doesn't like that right now, and they're making it prohibitive for folks to do that unless they just really want to spend that money. So if you can do 20%, your rate's still gonna be high. You may even still have to pay points, even with perfect credit. If you do 25%, your rate's gonna be a little bit better, and you might still have points. It's been very Yeah, the government has been trying to discourage that as much as they can for the past year or so. And I mean, it makes sense, there's so many people out there that want to buy. We've seen that here in this market. So they're trying to get as many folks into homes as they can possibly be, because they know that's how wealth gets accumulated. So, but yeah, for the rental side, if you've got folks that want to do it, just know 20 to 25%, and the rates will be higher for sure. So,
So you said, I just want to make sure
Yeah.
I heard you right. So if you have a home and it's listed as it has to be listed as your primary residence, and you rent it at that time.
Yep.
And you're buying another home, then you have two primary residents. So if you end up selling the rental, then you're not going to get hit with the taxes as high, or the as you would a secondary residence.
yeah, as long as, if it's been owned for more than 2 years.
Okay.
So if it's been owned for more than 2 years, you don't have to worry about capital gains. But if it's less than 2 years, then, and that's even on a primary residence, you're gonna have to pay capital gains.
Right.
So, but yeah, so if you've got it as a rental and you rent it out for 2 or 3 years and you'd already owned it for, 4 or 5 years even before then, you're fine. There's no tax implication. And I would always say, talk to a CPA about that as well, just to be safe, because I'm not an expert on that. But at the same time, the big thing that clicks in my head is more than 2 years, no capital gains. That's at least the one thing I do know on that end.
Just
So,
to regroup, because I'm a little spacey, so
Yeah.
if I have a primary residence and I get a lease put in place, and I go buy the other property, it doesn't change the loan on the first one. That's correct.
yeah, nobody
The
can
paperwork
force you.
signed.
Yeah, exactly. No one can force you to refinance. You have to do that under your own volition, because otherwise there'd be so much predatory, which happened in the past. That's why they now don't, force folks to do that, because you have folks out there saying, oh, no, you got to refinance. And then the terms weren't as good. And then all of a sudden you have folks, not being able to make payments, and then foreclosures, and then that's not a good thing. So yeah, so you can absolutely have your primary residence and then decide to buy another primary residence and keep that old one and rent it out. You can do that 100% and you'll be good to go.
And not, go ahead.
I was gonna ask, what if it's FHA, you have to live in it for at least a year, right?
They want to see you live in there for at least a year. And honestly, this is across the board, VA, FHA, conventional. But they're not going to sit there and say, oh, you didn't live in that house for, I mean, what happens if you have a family member that lives in another state who all of a sudden needs medical care, and you're the one person who can do that, right? Or you get a job opportunity, your spouse gets a job opportunity and you have to move. They're not gonna come back and say, oh, well, you didn't stay there for a year. And so now, what are they gonna do? I mean, they can't, right? So, yeah, so good question, but yeah, they want the intent, and that's why when you're with a closing attorney, if you want to have a conversation, if sometimes I know realtors will know things ahead of time before they happen. And so even though the loan is going through, because sometimes I through the grapevine will hear some of these things as well. But that's why when the attorney's asking, to your knowledge, everything, in these documents is still, accurate. They would 100% want to say yes. You don't want to say, oh, well, I'm moving in a month because of X, Y, Z, because then the attorney can stop the closing, and then that can create a whole nother can of worms. So, yeah.
Man, we were bouncing all over the place. I love your energy, man.
Yeah, oh man, I'm shocked I got it, man. The chili cook-off took a toll on me last night, so my drink and everything. So it's great, because I hadn't even touched on the things I was actually kind of planned, but this is good, because this is what this is for. Like, I'd much rather be answering questions by you all than having to dig up topics on my own, to be totally honest.
So not
Yeah.
all, okay, well, let's keep going. So not all lenders, they all don't do all types of mortgages. And so, and you do manufactured home as well, right?
Yes, that's correct.
And is there a difference between like a manufactured home that's a single wide, double wide, or modular as far as loan types, or not so much?
No, not so much. I mean, so single wide is tougher, because they look at appraisers look at the square footage of these homes. And a single wide, there are some of those shorter single wides that are literally almost the size of like an RV or a camper. And also they're just hard to find comps for. So I've done a few of them in my time here with Equity Builder, and they always end up being way more tricky than what you expect. And that's not to say we don't get them done, but it's just know that specifically with single wides and the shorter ones, that they can be, they can have, appraisers can just have a tough time finding, comps for them, because there's just not that many of them around anymore. Separate from that, some of the, outside of that, they're all considered manufactured homes. Most of the ones these days are going to be double wide. Modular homes, even though they're modular, still considered a manufactured home because it's still a prefab home that's built and then moved, well, I guess kind of moved on location there. So they all tend to kind of fall under the same umbrella. Some of the big differences that you're gonna see with a manufactured home versus a stick-built home, down payment, the minimum on manufactured is 5%. So not 3.5 if it's FHA or 3% if it's conventional. It's always gonna be 5%. VA is the one exception to that, but VA manufactured home loans are also fairly tricky to do. So again, they can be done, but I always caution folks like, hey, listen, this is gonna be one of those loans where there's gonna be some days you're gonna be really happy with me, and then there's gonna be other days you may be like ready to, ready to pull your hair out. So, but I just try to be upfront with folks about that, just to set the expectation and know that, we always know every type of loan or every type of purchase is gonna be a journey, whether you're doing cash or whether you're using a lender or anyone like that. So, yes.
You just said the advice, I wanna make sure I heard it right.
Yep.
So you said we're manufacturers home, it's usually 5% down?
It's always 5%.
It's always 5%.
Always 5% down. The one nice thing I will add to that is I do have down payment assistance now. So that's something that just got opened up to me towards the end of last year. And I've actually got some flyers I'll hand out to you guys, but I've got them in a digital format as well. And I know I posted it on the Keller Williams internal page a couple of times. It's not the type of down payment assistance that Ryan has through North Carolina. This is actually through an Indian reservation called Chinoa. And I mean, literally, that's my reaction was like, okay, but basically they've got an agreement with the government to offer down payment assistance, and it's across the country with any broker like myself that has access to the lender that offers it. Some of the criteria, I'll just literally read off here. So they have and it's a type of FHA. So the down payment assistance will cover the 3.5% down on that. Minimum credit score is 600. Manufactured homes are allowed.
Oh, wow.
Yeah, they've got 3 different types, and so, and again, anybody wants a copy of the flyer, yeah, and in fact, online as well, I can send it to you. But,
It might be something you want to just
yeah,
add to the internal group.
yeah, I've actually done it a couple times, so I will do it again. But yeah, so I've sent it because I knew this was something that could help folks out, so. No income limits, trying to think what else on here I see.
No income limit?
No income limits,
So it could be as high and make as much money versus. Oh.
Yep. Trying to think what else is on here. So there is one type that's a little bit more tricky to get. That's actually will give you 5%. And they do it as either a forgivable or a repayable type on all of these. So there's 3 different types. They're all either forgivable or repayable. Forgivable means after they've lived in the house for 10 years, it's forgiven. Repayable means obviously if they've been in the house for a certain period of time and they decide to refinance or sell, then they have to repay a portion of it. So the forgivable one's obviously the more trickier one to get approved for. Interest rates are going to be higher on these. I just actually ran a quote on one earlier this morning, and it's around 7.25% right now. So, but they're getting, no down payment. So, which is nice. And on the 5% one, the extra 1.5% can help cover closing costs. So in some cases, you may have someone with no money out of pocket or close to no money out of pocket to buy a house. So, yeah, so here, I'll just go ahead and I got a few of these here, so I'll name out for you also, that way you got them. Again, for those of you online, I can send a PDF of these as well. Just shoot me an email. I'll make sure I type that up and get that to you before I forget. So there you go. There you go. You're welcome. There you go. You're welcome. All right. So if there's anything you have questions about it on the flyer there as well, of course, feel free to ask, because that's what this is for.
1 to 2 units only.
So no multifamily. So for example, it can't be like a condo building or one of those, homes that's been broken up into a bunch of different units and they're buying the whole thing.
But like a duplex.
Yeah, correct. Yeah. So like a duplex could work. Yeah, 1 to 2 units. Yeah, absolutely. Yeah. So, and again, it says minimum credit score of 600. And I don't say this to be discouraging, but the closer the score to 600, the tougher it's going to be. The great thing about the lender that I work with, it's a company called Orion Lending. I don't know if you guys are familiar with them or not, but they even if I submit, what I usually do is that if I'm doing the down payment, I always go for the 5% forgivable because that's about, the best terms possible for folks. But they'll come back and say, we couldn't do that, but we could do the 3.5 repayable or the 3.5 forgivable, whatever the reason may be. So, but yeah, no, it's really great to be able to offer that now. So anyone else got questions
I
about any of
do
that?
have another question.
Sure.
That worked for my own.
Right, yeah, I mean, good.
Stepping out of the residential part.
Yeah.
Do you offer commercial loans?
No commercial loans and no land loans either. So I usually get about one text a week or two of somebody asking or a phone call or an email, hey, can you do land loans? Unfortunately, I can't. I know Ryan's company, United Community Bank, they've got folks, they're not Ryan himself, but they've got folks that can do it. I also have a contact over at, I believe it's First Carolina Bank, who can do land loans as well. And those are usually my two folks that I steer folks towards if it's something I can't do.
Ag Carolina is a great one for.
Ag Carolina, okay,
Yeah,
that's a big one.
AG Carolina
Cool.
For land or
for land.
For land?
Yeah,
Okay,
they're a
that's
great
good.
one. We use it a lot.
40% down still, or is it?
It depends on the credit. and
Depends on credit and
everything,
everything else.
down
Yeah,
payment.
yeah, makes sense. Okay,
So it'll all depend.
yeah.
It's
that's good.
land's funny because it's two up and down, right?
Oh, yeah, definitely. Yeah.
While we're talking about manufactured homes, so
Yeah.
so are you like a credit union? Like credit unions, they'll do a manufactured home, like employee state credit union, but they do only like a 15-year loan. Are you limited to 15 or can we do 30?
No, these are 30. Yeah, all 30-year fixed. So, yeah, so FHA. So, yeah, it's a 30-year fixed and can do 30-year, can do 15 if they want to do it as well. But yeah, so definitely got options on there as far as that goes.
And also some credit unions require like the roof has to be like no more than 10 years old.
Right,
Do you
yeah.
have that as well?
I would say we probably fall under whatever FHA guidelines are. So, I'm looking on here, I don't see anything specific about the roof,
Okay.
and they haven't shared anything to me about the roof, they being Orion. But I can double check with them and ask, I got a contact there that I can always ask for. So, but check, I don't see it on this here either. So, anybody else got any other questions about anything right now, or?
I do.
Yeah, go ahead.
Okay,
I'm here.
so also going back to, let's say if I come to get a single phone, the regulation is in the house.
Okay.
So that loan, it will kind of combine with the one that I already have standing and it will go into the monthly payments, or it's two different payments?
Two different payments. Yeah, they're both independent. Yeah. So, not unless you wanted, well, no, because if it's more than one, yeah, it would
There's
be
no
two.
way to combine.
Yeah, no, it wouldn't be a way to combine it on that one. It'd stay separate there. So, one thing I did want to at least make sure I take time to mention, oh yeah, I take up 20 minutes, sorry, we're good. Is just a little bit about what's going on in the mortgage world right now as far as rates go. So yesterday, the Federal Reserve met and they raised their Fed funds rate by 1/4 point. And you hear so many folks, and I hear so many folks, I hear realtors say this, I hear everybody say, oh, well, the Fed raised rates, so that means mortgage rates are going to go up. Well, the exact opposite happened yesterday. So I was quoting exactly, yes. And I'll give you the reason why here in a moment, but just to give you context of how much rates shifted. Yesterday morning before the Fed meeting, which was at 2 p.m., was when they released the statement saying they were raising their funds rate by 1/4 point. My 30-year fixed rate top tier was sitting around 6.125, 6.25 on rates. And after it dropped down to 5.99. So that made about 1/8 of a point, 1/4 to 1/8 of a point drop in rate just because of the Fed raising their rate. So, and the reasoning behind that is the market already knew that the Fed was going to raise their funds rate. They had already built that into what mortgage lenders, they already knew this was happening. And this is because it had been communicated since December that their first meeting of 2023, they were going to raise their rates another 1/4 point. What also helped the market was the Fed acknowledged that it appears that we've turned the corner with inflation, which if anybody's been keeping track of that with the economy, and even though it may not seem it right now, specifically with things like gas prices, because I know they've gone back up since when they were cheaper, but for the most part, a lot of the reports that they review and that they look at have come in saying that prices are coming down, things are slowing down. You hear all this news about all these tech companies laying off employees because they were, rocking and rolling while COVID was going on, and now, not as many people are buying their products or using their services as they were before. So there is a downshift, and that's, while not good for those folks who are losing their jobs, for the overall economy, it's good because it's helping us center things back up to where it should be, which is now what's allowing the interest rates to start to come down. So the next big thing that's going to cause some volatility with rates, and when I say volatility, that can be either direction. That means they may go up, it means it could be volatility down too. So I use that as a very, it goes both ways type of term. But the next big report comes out tomorrow morning with the jobs report. So these are things that me and Ryan keep track of. So obviously I don't expect you all to, be following them as closely as we do, but it does help us relay that information to you, because we can say if the jobs report comes in and if it ends up being weaker than what they're expecting, or even if it's in line with what they're expecting, that's still weaker from what it was in January. And from December, because this will be the January jobs report that we're getting. And that will also show a further slowdown, and that will help rates continue to come down as well. So one thing to keep in mind, of course, going to be more competition. We're already seeing signs from January where mortgage applications went up. I'm sure you guys are all seeing this in the market. I think I've heard Brian or Grant or Jackson mention, that things have definitely seemed to be a little bit busier. I've noticed it. I'm doing more applications right now than I have, in a couple of months, which is good for me, but as well as for you all. But just know that as rates continue to come down, you're going to have more buyers coming back into the market. And so you're going to end up seeing more of those multi-offer, situations, and just some of that, you're going to lose some of that negotiating power. So if you do have folks that are on the fence right now for buying, this is a really good time, because rates have definitely come down from the highs that they were in. And there's still not that much competition because this news just hasn't filtered through to everybody yet. And we all know what's coming up here in the next month or two, spring. We always know that ends up being the busiest time of the year. So I just did want to share a little bit of information on that. Do you guys have any questions about any of those items there?
I do have a question about something that I really don't understand as much.
Okay.
The rate and the market, the market price of the house.
Okay.
When they talk about, the market crash.
Yep.
So what does that affect the price of the house? Is the interest rate is high or down?
Well, I mean, if you're thinking like in terms of like a housing crash, I mean, the only time there's ever really been one was in 2008, in 2009. And that was when lending standards were much, much looser than where they are now.
Yeah.
So, yeah, a lot, like literally self-employed folks could buy a house without providing any paperwork. They could just say, I'm self-employed, here's a profit and loss that they could type up themselves, give that to the lender, and they get a loan, right? Obviously, that's a lot different now. So, so in terms of, a crash, I mean, it will cause rates to go down just because there's going to be less people in that type of scenario specifically that are able to buy, because you're going to have a lot more people out of work. You're going to have a lot more people that are struggling to pay their bills, and so they're not going to be looking to buy. Our area here is unique because we've got 3 universities nearby, and we've got a constant talent pool. We got enough companies that have started to move here now and know about this place that it does insulate us some, but it doesn't mean that we're not still going to see any sort of a downturn if the market were to really, let's say the Fed has overdone it in terms of their interest rate hikes and they do send us into a recession. It's not going to be felt as hard here as it could in other areas. And that's just because we've been fortunate enough to be in a unique spot where there's happened in, 09, people, or even here during COVID, people moved here because it was less expensive here than where it was, where they were living. And there was space and inventory for folks to be able to buy. So does that answer your question or a little bit? Did a little bit out? Okay.
And where we at on FHA?
So FHA 30-year fixed right now is sitting in the low 5s. Yep. And then same thing with VA loans. So I kind of bundle those together, and USDA as well, if you want to add that one in there. I haven't done a lot of USDA here recently just because it just hasn't, in the market that we were in previously, it was always conventional was king, and then FHA/VA, and then USDA because it was the trickiest one to get approved for those folks.
And I know we covered a lot of this like every week on the mastermind.
Yeah.
On the Friday mastermind, right, in the morning.
Sure. Yeah, I know Ryan does that one. So yeah, yeah. I don't
Is that
know.
something that you could post every Monday as well?
Yeah.
Like on the internal group, just say, hey, just thought I'd let you know today's rates are man.
Yeah, yeah, I can do that. Actually, it's funny, when I first came on in 2020, so by the way, February is my 3-year anniversary with Equity. Thank you all. But yeah, once upon a time, I was actually doing that weekly. I was posting like a weekly mortgage update and was giving insight. I stopped only because last year it was like, how many times can you beat a drum in terms of rates are higher. And so I kind of pulled back from doing that as much just because I'm an optimistic guy. I don't like to think things are always going to be, doom and gloom. And a lot of the stuff I was reading and going over was always, kind of doom and gloomy. So I was like, all right, I'm just going to hold off. But I'll probably start doing that again. And yeah, on Mondays, I can definitely do that as far as where rates are. One of the things you guys also hear is there's a survey that gets released every Thursday from Freddie Mac. And they're one of the, think of them as like the FDIC that, insures money. They do that, but for mortgages. And they do this weekly survey where they reach out to a bunch of lenders on Monday and Tuesday of that week to find out what rates are. And you'll hear news reports say, oh yeah, mortgage rates are down or mortgage rates are up. Specifically on Thursdays, and sometimes they'll roll over into Fridays as well. But that is all old data by the time they get it. The market moves so fast now that you'll hear folks say, oh yeah, the rate's at whatever percent, it went up. And in reality, by the time it gets to Thursday, rates have come back down, So this week's going to be a perfect example. Where they were on Monday was up near 6.5%. And today we're at 5.99. So that's a half a point difference. It's a really big difference. I mean, that can make, the difference between someone who couldn't qualify for a home and now being able to qualify. So just know if you ever hear that, take it with a grain of salt, reach out to me or Ryan or whoever you use for your lender. And we'll be happy to give you an update on that. So, but yeah, I can still do that weekly as well, just to give you guys an idea as far as what's happening with rates and more along the lines of, are they trending up or are they trending down? Right now, they're definitely trending down, which is good. So, okay. Anybody else got any other questions? Anything else I can help? Sure.
Yeah, so like, for your company, like, what sources, I can figure out how to phrase it. Is everything like, not to predict like what rates are, but I've heard like different people, various people say, but like by June, let's go, like, oh, the interest rate's been dropped to 5, it's gonna be a lot better.
Yeah.
Then I saw something like Goldman Sachs said, like in January, that certain markets like San Diego or Austin, Texas, they're gonna have like a double-digit decline. And, but like on the flip side, it's like they're saying like big banks, they're funding people that like swoop all
Right.
homes in terms of rentals.
Right.
So it's almost not saying, not like saying they're manipulating the market, but like, who like do people? I'm just saying like, who
Yeah.
who the lenders look at like the source of truth? Like the
Yeah.
government, or you factor in what Wall
I have
Street said?
so I have a few different sources that I use. And so, yeah, there's always these reports that come out. Like I have subscriptions to Keeping Current Matters, which is geared towards real estate agents, but also towards lenders. So like a lot of my social media, I'll use a lot of their graphics because they just give it in a really good, clean way for folks to be able to read. So Keeping Current Matters, I have MBS, which stands for Mortgage Backed Security Dashboard, I believe, or something like that. That's what I was using in a lot of 2020 and 2021, whenever I was giving my weekly recap of the market. Every Friday night, I get an email that has basically a breakdown of what just happened the week of. So I use that as a source whenever I'm talking. I've also got MBS Highway, which is Barry Habib. I don't know if you guys are familiar with him or not, but he's been around forever. And he's actually in my world, in the mortgage lending, me and Ryan, we both use him. So, and he gives a market update every day, usually around between 10 and 11 a.m. And he's great because he'll even give us insight on like when we should be locking rates and when we should be floating. So, which is, also very helpful and insightful, because when I'm talking to a borrower, I don't want to get stuck, missing a low rates. And then all of a sudden they bounce up and then the ship to sail for whatever reason. And then, like I said, one thing and all of a sudden we're going to do something else. Right. But he's really good. And so those are probably the 3 main sources that I use. Along with just keeping track. I mean, I don't really search out any like specific government things, although we have reports that come out. For example, The inflation report, the next one's gonna come out on February 14th. So that's a data circle. Barry had even said May 10th, I believe it was, May 5th or May 10th is another date to circle, because based off of the inflation reports between now and then, we're looking at last year's data versus this year's data as it comes out. And May 10th was one of the reports that last year, when it came out, was really high on inflation, and it's where the government basically had said, okay, we really need to raise rates on that Fed funds rate and be way more aggressive than what we had been doing. And so if it's come down significantly, then that's going to be a big drop. And he's thinking that's when if we have a chance of rates hitting around 5% by the spring, then that's when it would the best likelihood of it happening. So, because again, it can't just be a straight linear drop. It's going to be a bit of a wave down. So hopefully that helps.
Yeah,
Yeah, definitely. So
Well,
Yeah.
February 14th is Heart Day.
Right.
It has to be good news on
Right.
February 14th. I mean,
yeah, some of the other reports that have already come out, some of the smaller reports, they've been trending down. The one thing that sent a surprise with the last inflation report that came out in January was the housing. And it's always been a lagging factor when it comes to the inflation. And sure enough, it actually had gone down in November. No, I'm sorry, it went down in December, but then it went up in January unexpectedly. And they're like, why'd that go up? But that's just part of the fact that some of these things don't always hit at the same time. And so they're thinking here in February, it'll correct itself a little bit more, because they do see that like rental prices have started to adjust downward in terms of them not raising rents up as quickly as they were last year. They didn't even look at that. So,
crazy expensive
oh yeah,
for rental.
oh yeah, believe me,
So sorry for people that,
Yeah.
I mean,
and it was tough for buyers too, because their rent's getting raised on them, and then they're trying to buy, and because interest rates were so high, I mean, it was just one of those unfortunate, scenarios where there was a lot of folks that made good money, but it, still between the rent or buying, it was just, pick one versus the other,
I
so,
have another quick question.
sure,
With the down payment system.
Yeah.
So let's say the discount point.
Yeah.
Can they also be included in?
yeah. Yeah, you can buy down rates on any type of program out there if you want to, especially in this case here, because with these types of down payment systems, again, I'm seeing like 7.25, and so obviously if they want to try to get it lower, then they can definitely do that. So credit will play a role too, though, because I've seen folks with credit closer to that 600 credit score still see 7.25, but there also may be a cost for that rate. So again, discount points, that's just the lender applying that just across the board, just to be safe, to make sure that they aren't, risking too much if the borrower has a tough time making those payments. So, hey, it's all good. You got 5 minutes.
Okay.
Well, I got 5 minutes. Yeah. Okay.
I have a question.
3 questions.
Yeah.
All right, we got 5 minutes for 3 questions. No, I'm just kidding. Go ahead.
The first one, it was over this one, the down payment assistance. So how long do they have to live in the house for it to be forgiven?
Yeah, so they're forgiven 10 years.
10 years?
Yep.
And then the second one, so with down payment assistance, are interest rates usually always gonna be higher?
Yeah, pretty much. I mean, you can have a 800 credit score, and it's still going to be somewhere in that 7.25, maybe 7% range. Yeah. So,
Okay.
and that's just because, again, they're taking a risk by covering that down payment up front of 3.5% of the loan. So there's going to always be, there's going to be a extra
Yeah.
amount there.
they want to make their money back in.
Exactly. Right. Yeah.
Nothing's free, right?
Social
Right.
exchange.
There you
Yeah,
go.
something to give you something.
Exactly right. Yeah.
It's like 2 of them. That was the one.
No, so in a way, it kind of is like the money that was for the down payment assistance, that will stay in a separate account. That it's almost like an escrow account, right? So you're not going to necessarily be able to see it or do anything with it, but it's just there in the event that if you do sell a house or even refinance, which is an unfortunate thing, you really have to stay there if it's the forgivable for 10 years. And then once that happens, that loan is forgiven, that secondary loan is forgiven, and then you've just got the balance of your main loan, and you're not necessarily making any payments on that second loan either. It's just kind of sitting, it's piggybacking on the back of the main mortgage. I guess that's a good way to look at it. So, yeah. Okay.
Well, before you go.
Yeah.
I want to say thank you.
Oh,
Because
absolutely.
I had 2 of them last year that
Yeah.
weren't gonna close, and you were able to swoop in and
Thanks.
within 3 days, we have them back on track and closed on time, so.
Well, thank you. Yeah, I appreciate
You
that.
help me make a lot of money there, so I appreciate that.
I try. So,
Now,
You don't get that with every lender, you'd be surprised. A lot
That's
of people just be like,
unfortunate,
I can't help you.
Yeah.
It's not, I don't have enough time.
Yeah, yeah.
And then I know one was like 10 days from closing, you turned it right around.
Well, thanks.
So
Yeah,
thank you.
definitely. You're welcome.
yes, Justin, so with the second forgettable one.
Yeah.
It says, after 36, considered on time.
Yeah.
Does that mean payments after you pay on time 36 times or?
Yeah.
Yeah.
Yeah, 36 months, so 3 years. So yeah, that one there is 3 years. You're correct. Yeah, three, I mean, like I said, there's nuance to each one of these here, so it just depends on there. So yeah, go with what that says versus if I say something a little bit different on that. Like I said, these are still somewhat new to me, so I've priced out folks with them, but I haven't had a ton of them come through just yet. So, and you have one more
Yeah,
question? Yeah, go ahead.
quick question.
Yeah.
I know this probably depends on like the loan and everything, but like I was having a conversation with someone interested in buying their first home and they asked me like, oh, where should my credit be at? And I
Oh, yeah.
didn't know what to say.
Yeah, minimum credit score 580 and above. So
Okay.
580 and above. If they're, again, closer to 580 they are, the tougher it may be. But there's, I mean, I literally got someone pre-qualified yesterday with a score of 588. So on a manufactured home at that. So, so yeah, so it's as long as it's above 580, there's a path forward. That's always a conversation I'm gonna have with folks too. One thing I will make a distinction, if it's a couple and they both have different credit scores, obviously, we always are going to use the lower middle score between two people. So the way I explain that is there's 3 credit bureaus, right? Experian, TransUnion, and Equifax. If borrower A has their middle score at a 700, and then borrower B of in any one of those 3 bureaus, doesn't matter which one, it's a 700, and then borrower B has their middle score to 699, that 699 is the one that's going to be used for the loan, risk-based. So they always go with the lower of the two. So we run in that,
The higher.
nope, always the lower, always. So if they don't count the high one, they throw that out. They don't count the low one, they throw that out. Whichever one's in the middle, and then it's the lower one of those 2 middle scores between those 2 borrowers. So just keep that in mind there as well. Again, I will have that conversation with them. I'll explain all that to them as well, but it's just good for you to.
Yeah, 'cause I
Yeah.
have, and also, first time buyer,
Mhm.
he wants to buy the house.
Yep.
And he keeps on asking me this question, like, so how much I want you to bring to the table, and I keep, I
Yep.
can bring you to my office, and you can speak with the lenders out there.
Yeah.
But they always so like scared to speak with the lender, I don't know why.
Yeah, it's all folks are always nervous to speak with folks. I was nervous before I bought my place, just because you don't know and you're thinking that they're gonna say no, and it's just a bunch of stuff. So, but it's 3 o'clock. I gotta roll. So,
So,
yeah, thank you all again. First Thursday of each month, I will be here at 2 to 3. No, you're good. No, you're good. All right. Buy online. If you guys have any questions, email me or text me, please.
Sign on to the Michael Lewis Marketing on
Yes,
Zoom.
and do that too. Thanks. Bye, everybody.
sorry for others.